In geopolitical engineering, a sanction is only effective if you hold a monopoly on survival. When the United States attempted to build a unified global coalition to crush a Middle Eastern economy in 2026, they reached for their ultimate weapon, the US dollar. Historically, this threat forces the entire globe into compliance. But this time, the sequence broke. Washington tried to solve a 2026 problem using 1990s math. They demanded absolute global unity. But when the United States looked behind it, half the world was missing. Welcome to the unseen market of the post-dollar era. The media blamed bad diplomacy. That is a comforting fiction. The brutal mathematical truth is that they didn't fail at diplomacy. They failed at leverage. Look at the mechanics of the modern Asian economy. China is the undisputed manufacturing engine of the world, and that engine runs on cheap, sanctioned oil. Beijing has spent the last decade building a shadow fleet of unmarked tankers, transacting outside the Western banking system. Meanwhile, India is quietly buying crude, refusing to isolate its suppliers, because it cannot afford to trigger hyperinflation for its 1.4 billion citizens. The West was asking the Eastern Hemisphere to intentionally crash its own economy to support a military objective. The answer was mathematically guaranteed to be no. Nations do not commit economic suicide on behalf of another empire. They adapt. Because the US weaponized the dollar, the East spent 10 years building a fire escape. Washington tried to lock the front door of the global economy, ignoring that the global South had already built a back door. This is the terrifying reality of 2026. The US still possesses the most lethal military on Earth, but they no longer possess a monopoly on survival. When you punish half the globe, that half builds its own bank.